What happens when the Roaring Twenties, a decade of economic prosperity and exuberance, come crashing down? What transpires when the very foundations of financial institutions tremble under the weight of unchecked speculation? Today we delve into the cataclysmic events of the stock market crash of 1929. In the golden age of the 1920s, the United States basked in an economic boom. This period, known as the Roaring Twenties, was marked by significant industrial growth, widespread consumerism, and a flourishing stock market. It was an era of prosperity, optimism, and seemingly endless possibilities. But behind this facade of prosperity lurked an impending disaster. The stock market, buoyed by reckless speculation, was on a perilous high. Investors, both seasoned and amateur, were drawn to the promise of quick riches, fueling an unsustainable bubble. Then, in late October 1929, disaster struck. The bubble burst, marking the beginning of what would become known as Black Tuesday. On this fateful day, the stock market plunged into a freefall, wiping out millions of investors. The roar of the 20s was silenced, replaced by the deafening crash of falling stocks. The aftermath was nothing short of catastrophic. Banks failed, businesses shuttered, and millions found themselves unemployed. The crash had not just shaken Wall Street, but it rippled across the globe, marking the beginning of the Great Depression. The stock market crash of 1929 served as a harsh reminder of the perils of unchecked speculation and lack of regulation. In its wake, financial reforms were implemented, leading to the creation of the Securities and Exchange Commission in 1934. The goal? To restore investor confidence and prevent a recurrence of such a disaster. In retrospect, the stock market crash of 1929 was a turning point in global history. It marked the end of an era of prosperity and the beginning of a decade of economic hardship. It highlighted the need for regulation and oversight in the financial sector, leading to significant reforms. To recap, our journey began with the economic boom of the Roaring Twenties, followed by the dramatic crash on Black Tuesday, and finally the aftermath that led to the Great Depression and financial reforms. The stock market crash of 1929 serves as an enduring reminder of the cyclical nature of economies and the potential dangers of unchecked speculation. It's a chapter in history that continues to shape our understanding of financial markets even today.